So let's get right into it. What if you could get in on the ground floor of a technology that promises unlimited carbon-free energy? But here's the catch. It hasn't made a single dollar in actual revenue yet. Well, that is the high-stakes gamble we're tackling today with Terrestrial Energy, NASDAQ ticker IMSR. They're playing on the absolute bleeding edge of next-generation nuclear, a game that's going to forge titans of industry or create some pretty spectacular billion-dollar flameouts. There really is no middle ground here. Welcome to Iron Financial, the show where we stress test market ideas to help you forge a stronger portfolio. And today, Terrestrial Energy is in the crucible. Let's see if its foundation is built on solid rock or if it's just sand. Okay, hold on. Everyone loves talking about the clean energy revolution, right? But revolutions, they cost a fortune. And right now, Terrestrial Energy is just burning through cash with absolutely nothing coming in the front door. I see the slick presentations, I see the grand vision, but as investors, our job is to look past the hype. We have to dig past the headlines and see if there's a real durable business being built here, or is it just a grand vision being funded by shareholder dreams? So, is this the blueprint for a future energy giant, or is it a sandcastle just waiting to get washed away by the tide of reality? Let's find out. All right, here's how we're going to crack this company open today. First things first, we've got to understand the bedrock. What exactly are we betting on with this new nuclear technology? Then we'll build the bull case piece by piece and look at the story the optimists are telling. After that, well, it's time for our signature stress test. We're going to see if the financials can actually handle the heat. From there, we'll dive into the balance sheet. Is there a solid cash foundation supporting all these ambitions? And finally, we'll deliver the verdict. Is this a generational opportunity to get in on the ground floor, or is it just a classic value trap for unwary investors? Okay, let's get into Section 1. Before we start analyzing the strength of this whole structure, we have to understand the materials it's built from. What exactly is Terrestrial Energy even trying to build? So at the very heart of Terrestrial Energy is their integral Molten Salt Reactor, or IMSR for short. Now, let's be crystal clear about something. You need to forget the old, giant, clunky nuclear plants from the last century. This is Generation 4 technology. It's a complete paradigm shift. What does that mean? It means it operates at lower, near-atmospheric pressures, which makes it inherently safer. It uses a liquid fuel that physically cannot melt down like traditional solid fuel rods. And the design itself, it's intended to be small and modular. That means they can be built in a factory and shipped to a site instead of needing, a decade of on-site construction. They are commercializing a design with roots that go back 65 years to research powerhouses like the Oak Ridge National Laboratory. So they're not exactly reinventing the wheel here. They're putting a modern, high-performance engine on a time-tested chassis. Let's move on to Section 2 and see how this whole thing builds. It's time to forge the bull case. We're going to set aside the financials for just a moment and focus purely on operational execution. What has this company actually built? What have they accomplished so far? Because, let's face it, a story without execution is just a fairy tale, and fairy tales don't build portfolios. 2025 was the year they went from being a cool concept to a really serious contender. Just look at the velocity on this timeline. In Q1, they secured a partnership with Texas A&M, one of the world's leading nuclear engineering institutions. This is not just a press release, folks. It's a massive vote of confidence from the academic and scientific community. Then in Q2, they partnered with Amerisco to go after the data center market. And that's a massive energy-hungry sector that needs reliable 24/7 power. In Q3, they got the government's stamp of approval, with 2 key awards from the Department of Energy and, critically, a huge green light from the Nuclear Regulatory Commission. And then, to top it all off, in Q4, they went public and raised nearly $300 million. Every single step here is another brick being laid in the foundation, systematically de-risking the entire venture. And this pipeline is the direct result of that relentless execution. We are not talking about hypotheticals anymore. This isn't some science project that's confined to a lab. They have over 10 projects with real identified customers already lined up, and another 15 in the works through partnerships. Think about what this means on the ground. Imagine a remote mining operation up in Canada that's currently relying on expensive, dirty diesel generators. An IMSR could provide clean, cheap, reliable power for decades. Or a new hyperscale data center for an AI company that needs a massive, uninterrupted power supply that the grid just can't guarantee. These are the kinds of multi-million, even billion-dollar contracts they're going after. The demand is definitely there, and this slide shows that Terrestrial Energy is absolutely in the conversation to win that business. Now, here's the catch for any bull, and it's a big one. You are not buying a ticket for next quarter's earnings report. You're buying a seat for a rocket launch that's still a decade away. Their own timeline, highlighted right here, points to 2034 for the first commercial operations to even begin. This is a deep tech play, a long-duration asset. It's kind of like investing in a biotech company that's only in phase 1 trials. The potential payoff is astronomical, sure, but it requires immense patience. The bull case is fundamentally built on the belief that all the small wins today, the partnerships, the regulatory approvals, will compound into a massive, world-changing victory a decade from now. A decade. A decade is an eternity in capital markets. The bull case? It sounds compelling, I get it. You've got big-name partners, government validation, a clear vision for the future. It's a great story. But you know what? Stories don't pay the bills. Now it's time for the stress test. Let's get under the hood, let's run the numbers, and let's see if this structure can actually handle the weight of those ambitions, or if it's going to crack under the financial strain long before 2034 ever arrives. First, let's look at the top line, the revenue. In 2024, they managed to bring in a meager $250,000, and that was from some engineering services. Not impressive, but hey, it's something. In 2025, the year they claim was so transformational with all those big wins, their revenue was a big, fat zero. Nothing. Zilch. All those press releases, all those handshakes, and not a single dollar of sales to show for it. From a purely financial standpoint, that's not just a crack in the foundation. That's a gaping hole.
Okay, so with no money coming in, you'd think they'd be watching every single penny, right? Well, you would be wrong. Their net loss more than doubled in a single year, jumping from $11.5 million to a staggering $28 million. Let that sink in for a moment. Revenue went down by 100% to zero, and their losses went up by over 140%. It's like they've turned the engine off, but they're still pushing the accelerator to the floor. And that, my friends, is a recipe for a spectacular high-speed crash.
So where is all this money going? Let's break down the burn. R&D is up by $5 million? Fine, that's expected. They're building a nuclear reactor after all. But look at the real shocker here. General and administrative costs are up by a massive $10 million. That is the price of being a public company. The lawyers, the accountants, the executive salaries, the compliance costs. And that cost isn't going away. It's now a permanent structural part of their burn rate. They've essentially increased their monthly bills by almost $1 million without getting any kind of pay raise. The burn isn't just high, it's structurally higher for the foreseeable future. And this brings us to the fundamental question that every single investor needs to be asking right now. We have a company with a brilliant story, zero revenue, and a $28 million annual hole in its pocket that's only getting deeper. All the partnerships and government approvals in the world don't matter if you run out of cash. So I have to ask again, how solid is this foundation, really? Or is this entire grand blueprint for 2034 just built on sand, waiting for the tide of the cash burn to wash it all away? That is absolutely the right question to ask. And if you're only looking at the income statement, yeah, the picture's grim. I'd be worried too. But for a developmental stage company like this one, you're looking at the wrong part of the financial statements. The income statement, that tells you about the past year's performance. It's a rearview mirror. The real story, the true measure of its durability and its ability to survive that decade-long journey, is on the balance sheet. And that's where the bull case finds its rebuttal. This one number changes the entire conversation, $298 million. That's their cash and short-term investments on hand. Your concern about a $28 million annual burn is valid, but it's meaningless without context. And this is the context. With nearly $300 million in the bank, they are not running out of money next year or the year after that. At their current burn rate, they have a runway that stretches for a decade. This isn't a sandcastle waiting to collapse. This is a fortress built on a mountain of cash. And this cash didn't just appear out of thin air. It was the direct result of that calculated, strategic move in Q4 of 2025, the business combination that took them public on the NASDAQ. They essentially sold a piece of the company's future to the public markets in exchange for the capital needed to build that future. This was the entire point of the exercise. They traded equity to fortify the balance sheet for the long road to commercialization. They executed the plan perfectly, and now they have the fuel to go the distance. Now, just look at this table. This tells the story of a company that went from the brink of insolvency to a financial fortress in a single year.
In 2024, they were a house of cards. They had more liabilities than assets, technically broke. In 2025, they're a skyscraper built of reinforced steel. Total assets exploded from $5 million to over $300 million. Liabilities collapsed. Their total book value, their net worth, swung from negative $13 million to a positive $295 million. For a pre-revenue company to execute a financial transformation this profound is, well, it's incredible. This is what financial health looks like. And here's another critical point you can't miss. They didn't just raise a mountain of cash. They used it to clean up their financial house. They paid off all their significant debt, completely eliminating over $16 million in convertible notes that were hanging over them. So what does that mean? It means no more heavy interest payments eating away at their cash pile. It also gives them tremendous strategic flexibility. If an opportunity comes up, or they need to raise more capital years from now, they can do it from a position of immense strength, not desperation. This is what a pristine balance sheet looks like. Okay, the balance sheet is a fortress, I'll give you that. The cash position absolutely answers the immediate survival question. They're not going bankrupt next year. But it doesn't answer the investment question. A huge pile of cash can still be burned down to zero if the plan is flawed or just takes too long to execute. So that brings us to the verdict. We've seen the promising blueprint and the scary cash burn, but we've also seen the massive cash foundation. How do we put this all together? Is this an opportunity for patient builders, or is it still a trap? You know, context is everything in this game. No company exists in a vacuum. On this slide, you see the established Gen 3 nuclear players. They're making billions. Now look at the bottom row, the Gen 4 innovators like Terrestrial Energy. What do you see? Zeros for revenue across the board, negative earnings for all of them. But here's the kicker. Investors are still valuing these pre-revenue Gen 4 companies in the hundreds of millions, sometimes billions of dollars. The market is betting that one of these companies will be the next energy giant. IMSR's financial profile, it isn't an anomaly, it's the standard for this disruptive sector. And with its strong cash position and regulatory wins, you can make a strong argument that Terrestrial Energy has a legitimate shot at leading the pack. And the market gets it. This quote nails it why. The current valuation isn't a reflection of the company's performance today, it's a bet on its massive potential in the future. But it's a heavily discounted bet. Investors are essentially running a model that says, we believe you have a shot at $1 trillion market, but we're going to bake in a huge margin of safety for the immense risk that you might fail over the next 10 years. That's why the stock isn't trading at $1 trillion valuation today. The cash buys them a fighting chance, a seat at the table, but it absolutely does not make them a sure thing, not by a long shot.
And that's precisely why this is not a set-it-and-forget-it investment. You have to actively manage your position and monitor their execution like a hawk. The verdict here isn't a simple thumbs up or thumbs down. It's a framework. Here's what you need to watch for in 2026. For the pilot programs, are they hitting their technical targets on schedule? For the fuel supply, are they signing actual contracts with suppliers to lock in their chain? For that Texas A&M project, are they actually breaking ground? And most importantly, for the cash burn, is it staying below, say, $10 million a quarter, or is it starting to creep up? These are the tangible signs of progress that will tell you if the company is staying on track to that 2034 goal.
So here's the bottom line. Terrestrial Energy has bought a ticket to the moon. But the journey is long, it's perilous, and it's far from guaranteed. The question you have to answer for yourself is this. Is their nearly $300 million war chest enough rocket fuel to get them there, or will they burn out long before they even leave orbit? The bulls see a rocket ship in the making, ready to redefine an entire industry. The bears see a ticking time bomb of cash burn and execution risk. Ultimately, you have to decide if you're willing to take that ride.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.